Welcome back to Investing and Trading Live, sponsored by Trading Academy, the world leader in financial education. I am your host, Josh Lilquist, with my good friend and my good pal, Mr. Al Connickson. In the last segment, we talked about, in the beginning of that segment, how to choose the right investing vehicle, and then what might you be able to do differently in those type of trading accounts with those vehicles, whether it's stock trading, options, futures, forex, income strategies, and that's how you actually build wealth, is extra income strategies. How you build wealth and how you use that wealth is at retirement time, and that's your income during retirement. So they're actually both equally important. We had a lot of people calling in and texting the word trading for these investing classes to the number 952-905-0975. Congratulations to those of you that did get that set up. When you call in, we'll answer the phone and try to get us a class that makes sense for you and a location that makes sense for your geographical area. But also, when you're texting in, just text the word trading. And this is for 2 seats for an investing class to help you get started if you're not sure what to do to get started. Call or text the word trading to the number 952-905-0975. Also, we appreciate all our subscribers on the podcast. That's Investing and Trading Live, wherever you listen to your podcast. So, Al, on this next segment here, as we were talking about earlier, there was something I wanted to talk about. I wrote it down really fast on the break, and I just cannot read it. So here's what we're going to talk about. We've been getting into these strategies on how to have extra income strategies to build wealth. And let's talk about that wealth bucket now, because it's so important to have enough. You mentioned I think it was the first segment, that the average return of, and this is based off of Yahoo Finance, was for the retail investor was about 3%, but the market actually has moved 9% on year over year on the S&P 500. So the returns aren't the same as the market. A lot of that is the fees. So people just aren't having enough to retire, but it's also a problem when you get in the market at the wrong time. Right. So let's talk through some of these different techniques and strategies that you're seeing so many people get into nowadays, because these options and options that we have are available to us, but you have to learn how to do it. So what are some of those strategies in that wealth bucket that really help people with that confidence getting into retirement?
Yeah, well, what's important when you retire is to remember that the income from your job is gone, but the bills, the cost of living is still there. What's the most important thing in retirement is how much income you generate off of what you have.
I thought it was golfing.
That's number 2.
That's number 2.
But what if you don't have enough money in retirement? If you just look at the number of years you have left and maybe you haven't saved enough, what do? Do you just move in with your kids then? Just rely on Social Security, which, by the way, is not going to be in the same shape when a lot of people that are 55 now retire.
I think we should all just do that. I think our kids deserve us moving back in with them.
So you might want to consider having more kids now.
Yeah, exactly.
Sure that they're properly educated.
There you go.
But the income strategies that we talked about, the options market, the futures market, the foreign exchange market, once you learn how to do those, you can use those in retirement. So maybe you don't have enough in your retirement accounts, or maybe you have a big retirement account, but you don't want to put a lot of it into something that maybe has a little bit more risk than you're comfortable with. Well, you can take a small amount using that leverage. You can have as an example, a $2,000 account could possibly control something worth $100,000.
And that would be the Forex market.
That's the Forex market. That's maximizing the value of your investments. But the reason that we have this retirement crisis now is that people have bought into that buy and hold strategy, which I talked about, where you are just crossing your fingers and hoping when you retire you have enough money there. You're not really managing anything. You no longer, more than likely, don't have a pension. You can rely on Social Security, hopefully. That's probably not going to work out well for you. The only thing you have control over is your retirement money, what you can do with the markets. Right now, the crisis is so bad that for a lot of people, retirement is just a luxury. Prudential just did a study or survey, this was published in Newsweek, about a midlife retirement crisis. For people that are 55, a lot of them just don't have enough money to make it through their post-working lives comfortably. That survey that they did found that the median average retirement savings of a 55-year-old was $47,950. The recommendation is that at 55, you have 8 times your annual income saved by that time. So good news for those of you that are making $5,000 or $6,000 a year and have $47,000 in retirement. You've made that 8 times. But most people are making more than that and will need to have more than that when they retire. Already a third of the 55-year-olds and 43% of people 65 are either postponing retirement completely or late until later because of inflation and the increased cost of living. And a lot of people, actually, their plan, we kind of joked about moving in with your kids, but that is 24% of the 55-year-olds expect they will need financial help from family members once they stop working. So this is a huge issue. Here's what it is. It's the problem between what you have heard and what you have not heard for retirement. This is what you have heard from financial advisors compared to what you've not heard. What you've heard is, hey, a 401k is tax deferred. What you haven't heard, a third of it is taken away when you retire. Everything you have in that retirement account is taxed, maybe at around 30%, could be even higher when you retire. What you've heard is that these 401k accounts, the mutual funds, are professionally managed. What you haven't heard, 90% of them underperform the market. What you've heard, hey, you're diversified. You have mutual funds or stocks that are in all the different components of the market. What they haven't heard, they're all the same asset. And that same asset, the stock market, the equities, have a huge correlation when the market's crashing, so everything gets sucked down. Here's what you didn't hear at all. The fees that are being charged to you are going to cost you 50 to 75% of what you could have in retirement. But you also didn't hear at all. You're 100% exposed to full bear market crashes, every correction that's out there. It could be 50, 60% correction. You're 100% exposed to that. So that's one of the reasons we have a retirement crisis. That's why it's so important maybe to come into a class like we're talking about here to learn what the markets can provide for you, what's available there, how can you take advantage of it. And if you feel that there's benefits there, you want to put the effort into learning how to take advantage of it, you may be in a position where you can totally change your financial future.
Yeah, that's kind of made me sad there for a little bit. Just to paint a picture here, they say time in the market, right?
Right.
Now, I just pulled up a price chart here, and from 1985 till now, the S&P 500 has about a 2,400 roughly rate of return, which is about 59%, right? Okay, so that's the last 40 years. Say people that are in their 60s and 70s, that's been their prime working years. Let's say they started investing at 20, which would have been in 1985 if they're 60, right? And they're told to keep it for the long haul. And who is struggling to retire? Those people. So there's a problem with that. Now, why do you think? I know we gotta end the show here pretty quick here, but why do you think people don't understand that?
It's because they've been conditioned by Wall Street to believe that buy and hold, holding on to something, and not overreacting. What they say is, don't worry. When the market's going down, don't get out. Hold on, and the market will come back. What they're not telling you is that you didn't have to ride that down. You could have protected your assets. You could have had maybe a hedged portfolio. So if the market goes down, even if the individual stocks you might have go down, your overall portfolio can maybe be protected so you don't lose anything. You might even actually benefit on the upside.
Yep. So here's the solution. Find out who's actually making the money in the market. It's the institutions. Who's moving the market? It's actually the institutions. How do we need to invest and trade? Like the institutions. Our strategy comes from the institutional side. We have many, 30 or 40 instructors. A lot of them came from the floors, the exchanges. That's who's teaching our various programs. People that have been in the market, that have moved the market, and know how the market actually functions. So to see how these institutions move the market, you have to actually visually see that. We could talk about it all we want. Hopefully we can inspire people to do things a little bit differently. So to come in to one of these investing classes, to see how the institutions move the market, but also how can we invest and trade like them, simply just call or text the word trading to the number 952-905-0975. That's call or text the word trading to the number 952-905-0975. 905-0975 to get started down the path to whatever your financial goal is for the future. You might need to do something a little bit differently, and hopefully we can inspire you. We talked about good, bad, and a lot of ugly here today, but we can inspire people. Once you understand this stuff, there are other opportunities, and there is light at the end of the tunnel. Come into one of these investing classes to learn how to do that. Call or text the word trading to the number 952-905-0975. Al, hit him up with the OTA tip of the week.
Well, if you have something that you dream of, a goal for you financially, but fear and doubt get in the way, maybe you've got that little voice inside your head, or you're listening to somebody else saying that you're not good enough, you're not talented enough or smart enough to pursue what's meaningful to you. The most common regret of people on their deathbed is that they wish they had lived a life true to themselves, not a life that people expected of them. And what we find is that if you start with using your imagination, you can make some significant changes. If you live out of your imagination, you're going to live out of your potential. We often talk about how powerful it can be to imagine how you want things to be, what you want your future to look like. Successful people often imagine themselves being successful before they are, and that helps them realize their full potential. So your imagination could be one of the most powerful tools you have to change your future. You know what? Now's a good time to start using it.
And you will never know unless you start. Call or text the word trading to the number 952-905-0975 to get started down that journey. As always, same time, same place next week. Until then, retire young, my friends.